welcome to Bro Billionaire. So this is RP here. Today we have an interesting topic related to gap trading. We'll discuss everything about gaps, how to trade them, how not to trade them. That's an important point. And then we'll check different strategies that we can adopt to trade the gaps, be that a swing trading or intraday trading. And yeah, different types of gaps. We'll check the screeners, how to search the gaps, gap up stocks, etc. These details we'll check in this next 15 to 20 minutes. So stay tuned. Do hit that like, subscribe button and hit the bell icon so that you can get notified whenever we bring such good educational videos. Yeah, let's start with the introduction. What are the gaps? So gap is nothing but an empty hole on your chart. Okay, so this is an empty hole. So these all things are gaps. So a stock either opens gap up or gap down. So in this case, it was a gap up as it was going up. And in this case, it was a gap down as it is going downside. So the basic principle behind the gaps is, so concentrate on this part. So this is called as close price of the stock, and this is open price of the stock. So all you need to understand is close and open of the stocks decide the gaps of the stock. So for example, here the stock closed at 15,763, and the next day it opened at, so this is, by the way, close and this is open. Okay, so you need to remember that. So here the stock closed at 15,763 and the next day it opened 15,874. So almost 100 points of gap up was there. So so you need to understand that gaps are between open and a close, not on the low and a open. Okay, so you need to understand that relationship. So that is important because that will define how the gap fill occurs. So gap fill is considered only when if it opens gap up, okay, and if its low touches the close, then only the gap fill is considered. So that's the basic introduction of the gaps. So in most of our basic trading days, you must have heard of gap fill concept. Okay, so whenever there is a gap up opening, the price fills the gap. So but that doesn't happen usually, and that doesn't happen always. So you need to remember, not all gaps get filled. So I did this mistake in initial trading days, and it costed me a lot. For example, during the COVID fall, I used to consider that it will fill the previous gaps, and this particular fall around this particular area, I used to think that it will go more down and fill this gap here. So there is a gap here, 7,200. So I used to consider it will go a little bit more down, fill this gap, and then bounce back from there. But yeah, it didn't happen. It bounced from 7,500. So not all gaps get filled. That's what you need to remember. So that's a basic introduction about the gaps. When the gaps get formed, that is the next point. So gaps get formed whenever there is a strong news on the fundamental or technical change in the underlying stock price. So for example, the example that I remember here is about the budget. So in India, there was a budget announced on this day, and as the budget was good, next day it continued the rally with the gap up opening. So there was a strong news, as I said, related to budget, then it continued the rally. So similarly, there were COVID fall and all those stuff. So there is a strong news backed by the gaps. Okay, for example, around this time here, there was, I think there was a monetary policy change somewhere here or here, resulted in a negative fall in the market. So as I said, the gaps are backed by strong news and a fundamental change. So the next point is, what are the types of the gap? So there are two basic types of the gap. One is full gap up and gap down. Another one is partial gap up or gap down. So for example, here, when you see a price opening below previous low, it is called as full gap down. And whenever the price opening above the previous high, it is called as full gap up. Full gap up and full gap down are considered when the price opens above the previous low and high. So what is partial gaps? So what is partial gaps? So consider this example here. This the next day stock had opened a gap up. So you must be already aware that the red candle has close on the lower side. Okay, so this is the close of the price, and red candle opens on the upside. So here it was a gap up opening. So there was a small gap up opening within the previous candle. So I have images of that. So when you check more closely here, you can see that this was the previous close of the stock, and here it opened gap up. Okay, it didn't sustain the gap, that is another thing, but this is the type of partial gap up that you need to remember. So this is the example of partial gap down. As you can see here, it had open gap down, but it was below previous close, but not below previous low. So within the previous candle's body, it had open gap down. So you must be seeing some other examples on your screen. They are popping related to HDFC Bank and Apple, which are showing you full and partial gap ups and gap down. So moving forward, there are two more types based on gap filling. So whether it's a fading gap or it is sustaining gap. Based on that, there are two more types. So for example, in this case here, okay, so the stock opened with huge gap up and then entire day it rallied and sustained that gap. So that is called as sustaining gap, where the price opened gap up and then sustained that gap. So let me move on a 15-minute chart so that we can have a better picture. So this is the area which we were discussing. So here it opened a gap up. It was a bullish candle initially on first 15 minute after opening. So this was a huge gap up and then the rally continued entire day. Here it closed on this day here, and next day also there was a little bit of up move. So here it is called as sustaining gap, and the gap that's get filled. For example, in this case, here on this day itself, it opened a gap up, a big margin, it opened gap up, sustained that gap for some time, and that by the end of the day it has closed that gap because there is some negativity. The trend was already down, so that's why the gap got filled. So this is how you can consider two more types based on gap filling or the gap doesn't get filled. So that is called as fading gaps and sustaining gaps. Moving forward, so the next topic is how to anticipate if there is going to be a gap up or a gap down next day. So how you can forecast the gaps? It's very hard to say that next day it is going to gap up or a gap down unless there is some pattern and unless some indicators are suggesting that. So let me switch back to 1 hour chart to give you a better idea on how you can anticipate, and there are certain rules that you can follow. For example, the most important thing is the gap itself will tell you whether there is a going to be gap down or gap up in the stock or a index. So for example, here in this case, the first gap that you see here is this one. So after a big candle here, it next day it started the fall, and the very next day it opened a gap down. So you need to remember that whenever you see a divergence in the price on even on lower time frame, you will be able to see the divergence here. Okay, so here price was going up and MACD was going down, so there was a lack of momentum. And whenever you see a first gap down, then you can anticipate that it can open a gap down next day or continue the downtrend. So here there was a signal. So what you need to watch is support and resistances, then the first gap, whether it opens gap up or a gap down. So here, for example, there was a first gap up opening, though the candle was red. After that, the trend continued on the upside. Here it was oversold zone, so price was making a lower low, but the RSI or MACD were making higher highs. So that was a positive divergence that were giving signal that sometimes somewhere near these areas there will be a reversal. So two big candles, green candles here, okay, and then a gap. So this was the first gap. After that, you can anticipate a gap or an up move, and then you can trade in the direction of the trend. So the most important thing that you need to remember here is gap itself will tell you whether there is going to be a gap up or a gap down next day. So look for volume as well. Volume can also give you a better picture, and even the candles that are going to gap up or gap down, those closing candles. So here there was a little bit of weak candle, so you cannot consider it can be a gap up case, but still next few days it gave a gap up opening. Here there were also gaps. So yeah, that's how you need to forecast the gap and anticipate. The gap also gives you the idea that there is a potential trend change and it is going to reverse on the upside if the gap gets sustained. So for swing trading, you can use this method. So the next point is related to intraday trading of gaps. So how you can trade on intraday. So let's say it opened a gap up. You don't want to forecast the gaps. You just want to encash whenever it opens gap up or gap down whenever it opens, then how you can forecast the move will continue on the same direction. So let's check that. For that, I mostly follow the 15-minute chart. So for example, the recent example here, you can see here there was a downtrend and there was a sharp big candles getting formed here that reversed the trend, breaking this particular swing. Okay, so this swing was broken with this huge candle. So that indicated there was a potential trend change. Next day it opened gap up. Okay, so how can you trade this? So after opening gap up, so consider the first 15-minute candle, whether it's a bullish or a bearish, mark the lines. Okay, mark those lines, and if it breaks the first 15-minute candle, then there will be a pullback. The pullback can be sharp or a slow. So in this case, the pullback was slow, and after that it had made this channel like structure. When this candle broke, it again continued in the upward direction. So this is the first gap in the after a downtrend, you can remember. So we can anticipate that there will be a gap created as well. What we are saying here is this is the first gap. Next day can be expected a gap up opening. One strategy that you can follow is mark the highs and lows of first 15-minute candle, and if it breaks the low, go for small scalping on the downside. And whenever there is a gap up opening, you should better be scalping, and you should not hold it for longer, because sooner or later it can bounce back, because this is a first gap. Similarly, if it breaks the top, you can go long on that day itself. So you can wait for breaking the top of that candle. So this is one strategy that you can follow for gap up opening. Another thing is you can use the EMAs and wait for the pullback. For example, here, okay, in this case, it opened gap up and then pulled back to 13 EMA, and it was moving around this area, causing the support area on 13 EMA. And then this big candle gave you a signal that it is going to go on the upside. Let's take some more example whether that works or not. For here in this example, you can see here there was huge gap down. Okay, there was a big gap down. You can see here, and then it continued the fall the rest of the day. So once it broken this low of first 15-minute candle, that is the signal for you that it is going to go on the downside. So that is based on first strategy. So the second strategy is, in some cases you will not see a pullback towards 15 minutes EMA. Okay, 15 minutes 13 EMA. So in this case, you would be surprised to see it got pulled back towards 5 minutes of EMA. Okay, so for example, as the gap was huge, you may not be able to see 15-minute chart 13 EMA. Okay, so here it pulled back to 5-minute chart on 13 EMA, and then the gap then it continued in the direction of the gap. So yeah, these are the two basic strategies that you can follow. So do backtest it. So for backtesting, you can use the Go Charting site. On Go Charting site, you can go and do the bar replays. So click on this button here, and let's say you want to test from this particular point a bar replay. For example, you can select this calendar, double click here, okay, and then play from that points onward. So it will load the bars, okay, and then you can trade based on that. You can just analyze whether your trading is working, and whatever strategies that we have discussed, whether they can work. So always backtest. Any analyst can tell you what different strategies, you can test them. You can use Go Charting. Here is a bar replay that is available on 15-minute chart as well. So this is how you should backtest. Let's check how you can get the list of stocks where they are going to gap up or gap down for a next day. One screener that you can use is a screener that is available on TradingView. Go to the screener section. So from products, I think you can go to the screeners. Okay, so here is the screeners. You can go here, and after that come to the filters. Into the filters, type gap. Here you can give the percentages, whether you want a gap up stocks or gap down stocks. For example, if you want a gap up, let's say 2% of gap up, then you will get the list of stocks. You can close this, and you can see this Adani Green, Adani Transmission, etc. had open gap up. You can add other filters. So this is how you should screen the stocks. So this is on daily time frame. Even on 15-minute chart. If the markets are open, after that you want to check the stocks which have opened gap up, then you can do check that as well. Okay, another screener that I have is, so what you can do is you can go on Google and type all gaps charting. So the first screener that you see here is related to gaps. So this is available, I think, only in India. You can check for your country what particular screener is there. So this here we are scanning the futures, all the stocks which are listed under futures. You can change that to cash. All the stocks will come under that. So this is related to gap down, and this is related to gap up. So you can switch them on and off. So if you switch this off, you will get only stocks which have a gap up opening. So this is the list of the stocks. So if you want to switch this off and just check the gap up stocks, you can switch this on and do that. Okay, so for example, here there is only one stock, Muthoot Finance, which was gap down. Yeah, this is the screener that you need to look for, and you can get the list of stocks. You can check on the trading view or any other site if the gap is huge, and if it's first gap or second gap. Based on that, you can do the trades. So that's all we have to cover. Do remember to backtest all the things that we discussed in this video. Never trust blindly on any analyst's strategies. They are designed by his own, and he knows what all loopholes are there in those strategies. And if it goes wrong, protect your position with this proper stop loss. So without the proper stop loss, your position will be getting hurt, and this will give you better picture whenever you backtest it. This will give you better idea, and you need to know loopholes on those strategies. So yeah, here if you want to do the backtesting, you want to see the previous results, you can go and download that. So it will give you 9 months of data. So previous 9 months, whatever stock has opened a gap down. For example, I have just selected gap down stocks. So for past 9 months, I'll get the data. You can go here and download the CSV. So in this CSV, I see the stocks which are gap down in October 2021, in November 2021, etc. So all the previous 9 months data I'll get from here. So you can go and backtest that on 15-minute chart. You can design your own strategies on Go Charting. So that's all for the video. Do make sure to subscribe and like if you haven't already. Thanks a lot. Have a good day. Bye-bye.